Welcome back to the deep dive. Today we are obsessing over a single word that, seems so simple until you actually try to define it. Access.
It is a small word, but it's doing a massive amount of heavy lifting in our sources today.
It really is. We are looking at two totally different worlds where the price of access is being radically rewritten.
Mhm.
On one hand, you've got access to financial liquidity.
Right, the credit card in your wallet.
And on the other, access to, well, the entire world through connectivity. We're talking about the thousands of satellites flying over our heads right now.
It's a fascinating juxtaposition. We've got a research note from the Bank Policy Institute on a pretty controversial proposal to cap credit card interest rates. And then completely on the other end of the spectrum, we have this massive two-part report from Space News detailing the absolute dominance of what they're calling the SpaceX era economy.
And what ties them together is this really tense relationship between, I guess, regulation and reality.
Exactly. In one case, a law that's meant to help people might actually lock them out of this system.
While in the other, a lack of restriction has allowed one company to basically build a global monopoly on orbital internet.
That is the core theme. We're
Yep.
looking at the unintended consequences of rules or, the lack thereof.
So let's start on the ground, the credit card. It's something most of us just take for granted. You swipe, you buy, you pay it off, or you don't.
Right. And that or you don't part is really the linchpin here. The Bank Policy Institute, or BPI, did a deep dive into a piece of legislation that proposes capping credit card interest rates at 10%.
Okay, I have to stop you right there, because if I'm listening to this and I have a credit card balance, hearing capped at 10% sounds fantastic.
Of course.
I mean, if I'm paying 20–25% APR right now, a 10% cap is a dream. Why on earth would anyone frame that as a bad thing?
It's a completely natural reaction. On the surface, it sounds like pure relief for struggling families. But the BPI ran the numbers using Federal Reserve data to see what would actually happen if you forced that cap into existence. And the results are, well, they are a classic case of be careful what you wish for.
So who does this really impact? I mean, obviously the banks aren't going to be happy, but is there a specific consumer group that's at risk here?
Yes, the industry calls them revolvers.
Which sounds like a cowboy movie, but I'm guessing it's less exciting.
Much less exciting. Revolvers are just the bank card users who rarely pay their balance in full. They carry debt from month to month.
Okay.
According to the 2019 data that BPI used as a baseline, that's about 22% of all bank card users. We're talking about roughly 21 million families in the U.S.
And these are the folks paying all the interest.
Correct. In 2019, the median interest rate for these users was 17.1%. Today, in 2026, it's likely even higher. So the proposal is to legally slash that all the way down to 10%.
I'm still playing devil's advocate. If the government says you can only charge 10%, that saves these families hundreds, maybe thousands of dollars a year. That's real money.
It is.
So why is the BPI saying this is a disaster?
Because of a concept called risk pricing. And we need to get into the mechanics of this because it's not just about banks being greedy, it's about the fundamental math of solvency.
Okay, break down that math for me.
Think of the interest rate as an insurance premium. If you're a safe driver, you pay your bill in full every month, you're low risk.
Right.
The bank doesn't need to charge you much, but a revolver, especially one with what the report calls a high-risk profile, is statistically much more likely to default.
What defines high risk in this context?
Flawed credit. Maybe they've missed payments recently, filed for bankruptcy in the past, or they have really high utilization.
Meaning they're using most of their available credit just to get by.
Exactly, like more than 50% of their limit. These are the people who actually need the lifeline the most.
Okay, I'm following.
Now imagine the bank calculates that for this specific group, the cost of the risk is, say, 15%. That means for every $100 they lend, they expect to lose 15 to defaults and other costs.
So their break-even point is 15%.
If the government passes a law saying you are legally only allowed to charge 10%, what does the bank do?
They lose money on every single one of those customers.
Right. They are guaranteed to lose 5% before they even sign the paper. No business can operate that way. It's not about making less profit. It's about not actively losing money.
So the bank doesn't say, okay, here's your 10% rate. They say
we can no longer offer you a credit card. The product just disappears for you.
it evaporates.
It does. The BPI analysis estimates that if this 10% cap goes into effect, 68% of those revolver families would either lose access to their credit lines entirely or have them significantly slashed.
Whoa, wait, 68%.
Yes, that's 14.3 million families.
So you're talking about nearly 15 million families who wake up one morning, their car breaks down, they reach for the card, and it's declined.
Correct. The irony is just tragic. The legislation is designed to help people drowning in debt, but the data suggests it would cut off the very people it aims to save.
So instead of a safety net with a high fee, they have no safety net at all.
And that pushes them towards, what, payday lenders, places where the rates are 400%, not 25.
And for the people who don't get cut off, do they just get the cheap rate and celebrate?
Not necessarily. The BPI suggests banks will just react in other ways to make up that lost revenue.
Like what?
We're talking about hiking up annual fees, getting rid of rewards programs, all those points and miles, and killing those 0% introductory rates.
Oh man, I use those all the time for big purchases. The whole 12 months, same as cash deal.
Well, about 11% of the users in the study were on those teaser rates. Those would almost certainly vanish. A bank's balance sheet is like a hydraulic system. If you squeeze one part, the pressure just bulges out somewhere else.
So the takeaway from the BPI report is pretty stark.
It is. The road to financial exclusion is paved with well-intentioned price controls.
It really forces you to look at the sort of hidden machinery of these products. We think of the interest rate as just a number the bank made up.
But it's actually a price tag on our own reliability.
Right.
And when you mess with the price tag, you mess with the supply.
Speaking of messing with supply, or in this case, completely dominating it, I want to pivot. We're going from a market where regulation might strangle access to a market where a lack of it has created a monster.
The SpaceX era economy.
That's what Space News is calling it in this report. And frankly, I love the branding. It feels accurate.
It's very hard to argue with.
Eh.
We're in January 2026. And the data in this report is just staggering. As of October 2025, SpaceX launched its 10,000th Starlink satellite.
10,000. Just pause on that for a second. I feel like just a few years ago, we were freaking out about constellations having hundreds of satellites. How did they hit 10,000 so fast?
It's exponential growth. To put it in perspective, Starlink now accounts for 2/3 of all active satellites in orbit.
2/3?
2/3. If you look up at a satellite tonight, there's a nearly 70% chance it belongs to Elon Musk.
And they are everywhere.
Operating in 150 markets and countries. And the financial side is where it gets really crazy. For years, critics said satellite internet was a money pit.
I remember that. People compared it to Iridium in the 90s. Big promises, big bankruptcy.
That narrative is dead and buried. Creatly Space, an analytics firm they cite, projects Starlink revenue will hit $10 billion.
$10 billion. That is serious revenue.
But the context is what matters. That is the fastest corporate sprint to $10 billion in history. Faster than Google, faster than Amazon, faster than Facebook.
That is absolutely wild. A hardware company growing faster than software companies. That shouldn't be possible. Hardware is hard.
And yet they're doing it. And with profitability. The report projects margins of 70% in 2026.
70%? For an ISP, that sounds like software margins, not I have to launch rockets margins.
It is unheard of. And this is where we have to talk about how. Why is SpaceX so profitable when everyone else struggles?
Is it just the reusable rockets?
That's a huge part of it. But it's the vertical integration. They own the truck and the cargo. SpaceX builds the rockets and the satellites. They are launching 280 satellites a month at cost.
Okay, so contrast that with the competition. Where is Amazon? Jeff Bezos has, virtually unlimited resources. Project Kuiper was supposed to be the Starlink killer.
Project Kuiper, they call it Amazon Leo now, is the perfect example of why money isn't enough. Amazon is legally separated from Blue Origin, his rocket company.
Oh.
So Amazon has to go out and buy rocket launches on the open market.
So they're paying retail while SpaceX pays wholesale.
It's worse than that. They're waiting in line. Blue Origin has had massive delays. ULA has had delays. So while SpaceX is launching every few days on their own schedule, Amazon is sitting on the ground waiting for a ride.
That feels like a massive strategic error.
It's the difference between being nimble and being bureaucratic. Amazon is years behind. They're targeting service in 5 countries early next year, but they have these really strict regulatory milestones to hit.
What kind of milestones?
They have to launch 50% of their constellation by July 2026, where they risk losing their license.
Wow, that is a tight deadline.
Meanwhile, SpaceX is just lapping them. And it's not just hurting Amazon. This dominance is absolutely crushing the old guard the legacy satellite companies.
You mean the GEO providers, the big satellites that sit way out there?
Right. Geostationary orbit, 22,000 miles up. For decades, they were the only game in town for things like airplane Wi-Fi. If you were on a plane 5 years ago and the Wi-Fi was crazy expensive and slow, that was GEO.
I remember paying like $20 for an hour of Wi-Fi that couldn't even load an email.
Well, Starlink is eating their lunch. The report lists huge wins. United putting it on over 1,000 planes.
Yeah.
Air France, Qatar Airways. And get this, Qatar retrofitted their fleet 50% faster than planned.
Because it just works better.
It works better because of physics. Low Earth orbit means lower latency, a faster connection. But it's also the price. In the maritime sector, for cargo ships, legacy providers used to charge $25,000 a month for slow internet.
$25,000 a month.
It was a captive market. Starlink came in with plans around $2,500 a month.
That's a 90% price cut. That's not disruption. That's an assassination.
It's a massacre. The old providers are literally being relegated to backup status. They're the spare tire you hope you never have to use.
So SpaceX has conquered home internet. They've conquered enterprise with planes and ships. But the report talks about the new frontier, direct to device.
V2D. This is the holy grail.
Okay, explain this to me like I'm 5. This is connecting my normal phone to a satellite.
Yes. No special bulky sat phone. No Starlink dish. Just the smartphone in your pocket talking directly to a satellite 300 miles up in space.
I remember reading about this during the hurricanes Helene and Milton.
That's right. The T-Satellite service, their partnership with T-Mobile.
Yeah.
It actually saved lives. When cell towers on the ground lost power, people were still getting emergency alerts and texts through Starlink.
That's incredible. I mean, that effectively kills the concept of a dead zone.
That's the goal. But to make this work at scale, to make it fast, not just for emergency texts, you need something very specific. You need spectrum.
Spectrum is always the bottleneck.
Always. Think of spectrum like a highway. The lane T-Mobile was using for space was narrow. It was like a little dirt road, good for a text, but you couldn't stream a video.
So how did SpaceX fix that?
They made a massive power play. They acquired spectrum from a company called EchoStar in a deal worth over $17 billion.
$17 billion. That's a huge bet.
It's massive. But it bought them S-band spectrum. Using our highway analogy, this is like opening up a brand new passing lane. It allows for much better data throughput. It moves Starlink much closer to offering actual 5G-like speeds from space.
So we're moving from SOS texts to watching YouTube in the middle of the Sahara.
Essentially.
Yeah.
And this leaves the competition in a really tough spot. You have AST Space Mobile, which the report actually calls the clear leader in the technology itself. They have these huge antennas and deals with AT&T and Verizon. But they don't have the satellites up, do they? They have 5. SpaceX has 10,000.
Scale wins.
Scale usually wins. And then you have China building their own constellations to compete, but in the Western world. It's SpaceX's playground.
Which brings us to the elephant in the room. We can't talk about this kind of dominance without talking about the referee, the government.
No, the regulatory landscape is absolutely crucial here.
The report notes that it's January 2026. The political landscape has shifted significantly with the new administration.
It has. The FCC chairman is Brendan Carr, and he has been a very, very vocal supporter of Elon Musk for a long time.
And we're seeing that support translate into policy.
Absolutely. The FCC approved power boosts for Starlink, which makes the signal stronger, and they cleared the regulatory hurdles for that massive EchoStar spectrum deal we just talked about.
Carr called it a game changer, didn't he?
He did. And look, from a consumer perspective, he's right. It is a game changer. Better coverage, dead zones disappearing. But it also cements SpaceX as the gatekeeper.
There's also this really interesting fight over rural broadband funding, the BEAD fund.
The $42.5 billion Biden-era fund. Historically, fiber optic cable was the gold standard. Companies like Comcast and AT&T won 86% of that money.
But it's so expensive to dig trenches to every farmhouse in Montana.
Incredibly expensive. Thousands, sometimes tens of thousands of dollars per home just to run the wire. Starlink is arguing, hey, we can do this for $80 to $120 a month. Right now, no digging required. Give us the money.
And regulators are listening.
They are now. They're scrutinizing those unreasonably expensive fiber proposals. It's opening a small door for Starlink, and even a small slice of that $42 billion pie is huge.
So let's try to bring these two disparate threads together. We started with credit cards and ended up in orbit. What's the through line?
I think it comes back to that word, access, and the tension between protecting the consumer and enabling the market.
In the credit card world, we have a proposal to strictly regulate the price, the interest rate, to protect consumers. But the evidence suggests that protection effectively destroys the market for the people who need it most.
Right. It's a paradox. You make the product safer, but you also make it unavailable. The market says, I can't serve you at this price, and the door just slams shut.
And in space?
In space, we have the opposite. A largely deregulated, or at least highly supportive environment. The government stepped back, or actively helped, and allowed one player to achieve immense scale.
And the market worked. It created a product that's faster, cheaper, and better than what existed before.
It worked incredibly well. We have global connectivity, emergency comms during hurricanes, but the cost of that success is a near monopoly. We've put the global communication infrastructure largely in the hands of one company.
It's a tension between efficiency and equity, isn't it?
That's a great way to put it. The credit cap tries to force equity but kills efficiency. The space market maximized efficiency but maybe sacrificed long-term competition, and the gap is only getting wider.
Right, the V3 tease in the report. Because 10,000 satellites wasn't enough.
These are the new generation satellites SpaceX is rolling out. They're the size of a Boeing 737 fuselage.
Wait, really? That big?
They're massive. And they aren't just reflecting signals. They're serving as orbiting data centers. We're talking gigabit speeds. The gap between SpaceX and everyone else isn't closing. It's widening into a chasm.
Which raises a pretty provocative final thought for everyone listening to mull over today.
Here's what I'm wondering. If SpaceX is the only entity capable of providing global, uncensorable internet, and the only one keeping comms up when our networks on the ground fail, have they become a utility? Should they be treated like the power company?
And on the flip side, if banks can't price risk accurately because of a government rate cap, does the safety net of a credit card stop being a standard financial tool and become a luxury good reserved only for the wealthy?
Two very different kinds of access, both potentially changing shape right before our eyes.
So look up at the sky tonight, or maybe just look at your credit card statement and think about who holds the keys to your access. Thanks for listening to The Deep Dive. We'll catch you next time.
Goodbye, everyone.